Today we are talking about what services are included in just basic bookkeeping. We talked a couple weeks ago about just additional services you can add on top of basic bookkeeping, and we did a high-level overview of that, of what basic bookkeeping looks like, and then what it would look like to add on. Today we're just going to dive in and focus specifically on that basic bookkeeping that you can offer for your bookkeeping business. And these are what me and Megan call like our bread and butter clients. These are the foundation of our bookkeeping business. These are the clients we're really looking for because it helps us run a smoother bookkeeping business. These clients can range in size from a client that's doing $100,000 a year to a client that is earning $4 million. I have a client that's earning $10 million a year, and he falls into this category. When it comes to basic bookkeeping, you are categorizing. So if you think about QuickBooks Online, you have, hopefully, you have the bank accounts connected. If you do not have the bank accounts connected, you can actually manually import the transactions through an Excel file. You can use Sassent and import them through an if file. Multiple ways to get them in. The easiest way I find, if it's not connected, is to use the QBO file from the bank. So download the QBO file and just upload that. No messing with formatting or things like that. And I am watching the chat. If you guys have questions and need to interrupt me, go for it. So bank feeds connected, you're going to categorize the transaction. So you're going to see like an Adobe expense come through. So that might be a subscription, might be an office expense, depending on how you're coding it. So you're going to code it. You can set up rules that kind of prompt you, oh, hey, this is where we're coding it. I personally don't use auto add rules. If you want to know more about that, let me know. But I will do rules so I can just quickly go through, code it. My team can quickly go through and code things where we want them to go. So that takes a little effort off of that. So we're going to code all of those transactions, get them organized on the financial statements where we want them, and all of that information in. Step 2 is we're going to reconcile the accounts. So in QBO, you're actually going to click reconcile. It's going to take you to another screen. You're going to put in that ending statement balance. Hopefully the beginning balance matches the statement. Sometimes banks don't actually match, so you'll just double check all of that. If you need help, let us know. We do have training on all of this in the Bookkeeper Blueprint course, but we're always happy to do a live call with you one-to-one to show you any of these steps. So you're going to reconcile. You're going to put the ending balance. You're going to check off anything that's on the statement, leaving anything that's not on the statement. In the reconciliation screen, you'll get a 0 difference at the top. Hit reconcile. You're done with that stage. You do want to see if there's anything left over. Why is it left over? If a check was written, it's August 29th today. And so if it was written today, it might not be cashed until next week. So we wrote it today. We handed it to the person tomorrow. It's Labor Day weekend. It's going to clear probably September 3rd, unless they cash it on Saturday. But let's just assume it clears September 3rd. That will be listed as an outstanding item in your QBO. And that's okay. We just want to pay attention to things that are February uncleared checks. That matters because that's beyond the 120 days that the check is probably valid for anyway. So it probably needs to be voided or journal entered out, depending on how you do it. And if they're accrual, cash, all of those things. So we'll address the check, and it might need to be rewritten, or it might need to be remitted to the state. All things that we just want to pay attention to. Again, we can always talk to you more about those little details as we go. So reconciliations are now done. We know exactly what's going on in their books. We know exactly what is outstanding on the bank account. Step 3 would be to review the financials. That is looking for things that are inconsistently categorized. Maybe we got a permit renewal and the team accidentally coded it to an office expense when in the past years, we've always coded it to permits and licenses. We just want to look for those consistencies. So financial statements should be consistent. That is a GAAP requirement. So we're looking for consistency. Is it comparable? Is it consistent? So that's one thing to look for. Another thing is just, is everything in the right place? Do the bank balances on the balance sheet match the bank statements? Do the liabilities, are those reconciled? Are there any weird things going on? Have we coded anything to a parent account if we're using sub accounts? So we don't use parent accounts if we are using sub accounts. So if you have office expenses, but then you have 5 subcategories that break out what those office expenses are, you wouldn't have anything in the parent office expense. It would always be subcategorized. So those are some things that we're looking for. We might also review the financials month over month. So I run a year-to-date, month-over-month report, and often year-to-year report, and see where, that's just me maybe taking it a step further, but I'm looking to see, is it consistent? Is it comparable? What's going on with the client's business? Just so I know. That allows me to give him a note, her note. Is business up? Is business down? How much are we analyzing? But I'm doing it just to make sure the financials are complete. Maybe I noticed last August and September, there was an annual expense I haven't seen come through yet. I might be looking for that and seeing, hey, is this going to come through again this year? If they prepay rent, things like that, that we want to pay attention to. Okay, so that's reviewing the financials. And then we're actually going to issue the client financials. I do this through an app called keeper.app that allows you to issue the financials right then and there, like through the portal. Once they're done, once they're reviewed, it will format the balance sheet, the profit and loss. If you want the cash flow statement sent, anything else that you want sent can go right there. You can also do this in QuickBooks Online. So QuickBooks Online, you can automate this process a little bit in terms of maybe you want to send every 2 weeks an accounts receivable aging report. I do that for one of my clients that does a lot of AR. Not a lot, but they do AR and they want to follow up on it. They want to check in with their clients, all of those things. So I just send them an automatic report out of QBO. If I were to issue financials, you can set up the financial statements and include whatever you do or don't want. So standard financials that you're going to send would be the balance sheet. I have seen bookkeepers not send the balance sheet. I just don't think it's a complete set of financials without it. And the argument being that if a client doesn't understand the balance sheet, then they're coming back to you with questions. I don't think that's an issue. It can be an issue. I've had an issue with a client recently who gets really hung up on where they're seeing interest payments. They're seeing the payments on the balance sheet, they're seeing interest payments on the P&L, and they get really confused as if it should be in one place or the other. So yeah, that might come up. It doesn't come up often for me, or its simple explanation really handles that for me. After that, so I send the balance sheet, the profit and loss, and then any supplemental reports such as AR aging, AP aging, if they're using those. The cash flow statement, you could send that. I consider a bonus report because while it's a part of a standard set of financials, that's where I'm like, the clients don't understand what this is telling them. For some it does, and then I do charge to send it just because I have to extra review it and make sure any anomalies in that report are explained to the client. After that, I consider myself done. So this is where bookkeepers start getting really turned around. I've heard a bookkeeper recently tell me that they get really stressed if the client doesn't review the reports. I don't think that's on you. I think once you send the financials and get all of the questions answered that you have outstanding, it's not on you whether or not they answer or review them. They don't need to tell you that they reviewed them. That is just their information. That is the product of your service. You can send those monthly. You can choose to send them quarterly. That's up to you and how you position the service. I have a client who we do the books monthly for, but he does not want to see the financials except quarterly. What else is there? There was another thing that came up recently with financials. Oh, if clients don't answer questions, you're going throughout the month, you might be using something like Keeper to ask your clients questions. What is this random Walmart purchase? Is it personal? Is it business? And you don't have an answer for it. Until year end, I'm okay with leaving those in. Ask client to answer uncategorized expenses. I would love for them to be answered throughout the year, but those aren't going to hold me off on sending the financials because the information, the income, the expenses are still there. Now, granted, if it's a distribution, that's going to change if it's on the P&L or the balance sheet, but typically that's not going to slow a business owner down from running their business. And that's ultimately the goal, is the financial statements give the clients information to execute and run their business well. I had a client a couple of years ago tell me that when they reviewed the financials I sent them at year end, they were actually surprised at how much they had made. And one of the reasons they had come to me was when they'd done their financials or their tax return for that year, they realized how much they were making. And the comment was, when they onboarded, if I had known I was making that much, I would have hired. And he just didn't realize he had enough money to hire a team member so that he could save himself time. So that's what we want to do for clients. We want to make it easier for them to run their business without running themselves ragged. I've had clients who I'm doing their financials and I'm doing that month over month report, and I see a bank account that they're really not using, but they have a bank fee for every month. Hey client, do you really need this bank account? I just wanted to let you know you're being charged every month for this, because they might not know those things. And those are just conversations we can have as clients. Okay, so that is high level view of what we do as basic bookkeeping throughout the month. And Megan had a question. She actually got asked what is included in basic bookkeeping. So that's what kind of prompted this question. So if you guys have questions throughout the week, feel free to share them. We love answering them. And we can always go deeper when we're on these calls. But I mean, I was talking to someone today and they do a very specialized form of accounting for their clients. So they do more than just basic bookkeeping. And she has a client that is just basic bookkeeping, and she's frustrated by the client. Can you tell me what these transactions are? Can you do your part so that I can do mine? And she's not charging the client very much. And so it's really important that the client does their part at the rate that she's at. And so I proposed to her, what if you had two departments? Like you had your specialty department, and then you had just your basic bookkeeping department, and you let go of that a little bit. So in the basic bookkeeping department for her, can you hire someone full-time or gradually get to someone that is full-time and let them handle the daily coding of transactions, the reporting, the checking, expense inconsistencies, all of that. And I think sometimes just thinking about what we do as departments, if you do more than basic bookkeeping, or even just viewing your basic bookkeeping service as a department, because it helps you segment your business from you yourself and you doing the work, right? It starts to allow you from saying, hey, this is now my full-time job, to, hey, I'm running a business, which I think is really important to do as a business owner who wants to do this long-term. Obviously, if you have a short-term goal, like quickly get out of debt or something, maybe you do want to be doing all of the work. But if you're looking to grow an asset that's not taking up all of your time, definitely consider a department versus just the whole business where you're having to touch everything.